Hi, it's Joni Michaels, and it's my pleasure to introduce you to Joe Clark, host of Consider This Program. Joe's a certified financial planner and former professor at Purdue University. He's the managing partner for the Financial Enhancement Group. Joe's passion is teaching people about their money so they don't make inefficient financial decisions that lead to frustration and devastation. The Financial Enhancement Group serves more than 900 families in 31 states and manages more than $400 million. The Financial Enhancement Group takes care of people who don't want to worry about their money so they don't make inefficient financial decisions. Joe addresses your questions about money in 5 critical elements of finance: retirement planning, or what we like to call your life after work, tax planning, investment planning, life happens, the good, the bad, and the ugly of life, and legacy planning. The Financial Enhancement Group can be reached at 800-928-4001 or visit yourlifeafterwork.com. The Financial Enhancement Group is an SEC-registered investment advisor. Securities offered through World Equity Group, Inc., member FINRA, SIPC.
Good morning and welcome to Consider This Program. I'm your host, Joe Clark.
And I'm Angie Kinzer.
Man, are we happy to have you in this quarantine, coronavirus, COVID-19. I got to tell you, my prayers and we've lost 4 people we know, and in a town of 60,000 people, I don't even want to talk about that, but we had over 24 people die at one facility, and so I do not want any of you ever to think I'm taking this lightly. I'm not. My daughter is a home health care worker. My youngest daughter is a nurse in nursing school. We very, very much care about our people on the front lines, but emotionally, I have
over it.
I have reached my point of not hugging people. Seeing my daughters in the driveway and not hugging them, not hugging people that I love dearly, that are friends and family, not seeing my church. I am ready for this to get back when we can.
Yes.
Not a doctor. This is not me telling you you can do that. I'm just telling you my honest, unabridged emotion. Okay. However, it's May 2nd.
It is May 2nd, and now I haven't done this in a while, which is pull up this day in history. So for May 2nd, I thought, let's see what was going on in history for May 2nd. And this is what I come up with. The second thing I'm going to mention is I want you to elaborate on because I had no idea. Okay, the first thing, which was in 1865 on May 2nd.
Ooh, Civil War days.
Yep.
I always have to say that because my family they're not into history but me, so I have to help people understand the time frame.
Well, this is historic. U.S. President Andrew Johnson offers a $100,000 reward for the capture of Jefferson Davis.
There you
on
go.
This day. Now this, in 1878, U.S. stops minting the 20-cent coin.
Ooh, I would not have known that.
What? Yep. 1932, we got Jack Benny's first radio show premiere.
Mm-hmm.
It was on the NBC network. 1941, this is interesting. The FCC approved regularly scheduled commercials during TV broadcasts.
Really? That wasn't until 1941. So
Mm-hmm.
Remember Pearl Harbor Day, easy for me to say, December 7th,
Yes.
1941. So that's the year you're talking about.
Yep.
Wow, that is really
so
amazing.
No commercials. I wish we could go back.
we do. It's called DVR.
Add just a couple more things. 1964, the Beatles released their second album. 1994, remember Dr. Kevorkian? He was found innocent on his assisted suicides. And then in 1999, John Elway from the Denver Broncos announced his retirement.
Well, there you go. All on May 2nd. Hey, we've got a lot to talk about today about money, though those were very interesting, Angie. Give us a call, 800-928-4001. We'll take a break and get right into the show.
Hi, Joni Michaels here. We know you care about your money, but are you tired of worrying about it? The Financial Enhancement Group takes care of people just like you who don't want to worry about their money. As fiduciaries, the team at the Financial Enhancement Group will care for your nest egg just like they would care for their own if they were in your situation. There are many decisions you'll need to make as you face retirement, and the team at the Financial Enhancement Group is here to help you. Call 800-928-4001 or go to yourlifeafterwork.com to set up a time to meet. The confusion and complexity of retirement is almost as daunting as is the excitement of retirement. Don't let your fear and frustration of taxes and investing derail your retirement. Call the Financial Enhancement Group at 800-928-4001. They'll give you a complimentary second opinion on your strategy for retirement. Begin your adventure in your life after work. Call 800-928-4001 or yourlifeafterwork.com. Now back to Consider This Program with Joe Clark.
Hey, a lot of different people are having challenges with the virus, and there are a lot of different things. Our world is going to be a new normal. There is no way around it. This is not an '08 or an '09, and I will tell you this: single parents are probably having some of the most difficult times that I have ever seen happen. We are going to have one of our financial planners on today with us, answering some questions. She was a single mom, now married with 2 kids. But Jamie Burton is going to be with us today. We're going to answer some of your questions. I am Joe Clark, your host of Consider This Program.
And I'm Angie Kinzer.
Happy to have you along. And Jamie, we are happy to have you along as well.
Jamie, happy to be here.
I'm glad. Jamie is out of our Lafayette office. Actually, years ago, for too many years, we won't have to go there, was one of my students at Purdue where I taught financial planning. So I've been able to watch her whole career. And watch her grow and develop. So Angie's in charge of the questions, Jamie's in charge of the answers, and I will provide additional commentary where needed.
Well, I figure we can get a little more specific, but just in general, since you are a working mom, Jamie, with young kids, I mean, how's the quarantine working out for you?
Oh, it's been very interesting. Like Joe said, I used to be a single mom. I'm not anymore, but with these quarantine times, it kind of seems like I am again. With Chad not being in the house and me being home with both the girls at one time, trying to juggle working from home and my daughter Jalen's e-learning schedule, making sure that all gets done, making sure Hazel still gets her naps and gets fed and all of that on time, and then trying to coordinate all of that at once. It's really an interesting time.
That was a lot you left out except for work.
I started with work.
Oh,
yes.
Okay. All right. And it's important to say that Chad is deemed essential. That's why he's not at the house. So
that's right. Yep. He's a lineman, so he's out still working. And with our work schedules, sorry.
I was just going to say we appreciate him being out there doing that. It's not having power in this period of time would make the unimaginable even more unimaginable.
It would, definitely. And it's a really cool thing to see, kind of on a side note, that these electric companies are working with people so they're not having to pay their bills right now through this hard time. If they're not having an income, that's kind of a little bit of a relief for them at this time. So he's still working, keeping the power on, but they are putting some things together to give people some relief during this crazy time.
Good.
It seems like all kinds of this has been a great experience of seeing people work with the public on different things. I have noticed that.
It has.
Now, one problem you've probably experienced, because I know some of the gals here that work in the Anderson office have as well, and that is with the schools and daycares being closed.
Mm-hmm.
Are you having to scale back on hours, or are you just getting creative and finding time to work, or?
Getting creative. So Jalen's 10, so she's really helpful with the baby, and Hazel has a pretty good nap time schedule going right now. So I know that when I'm scheduling meetings with my families, either through Zoom or through a phone call, I make sure to schedule those when she's going to be napping. And then other calls where I don't necessarily need it to be total silence, Jalen's a really big help with keeping Hazel entertained. So it's really just about, like you said, getting creative and making sure to coordinate your schedule so it works the best way that it can.
Yeah, because it's really hard too, because in normal circumstances, grandparents or maybe relatives could come help. But with social distancing, you're pretty limited on who can help. So I'm glad Jalen is able to help.
Yes, definitely. Typically, my mom will come once a week to help watch Hazel, and then Jalen would typically be in school. And then we had a babysitter that Hazel would go to. Well, she's not going to the sitter anymore, so we can keep her from being exposed to anything. So it's a whole new ball game, and it's just been really interesting.
Well, you mentioned too that you're doing Zoom meetings with our families. Have they all seemed to be pretty understanding that we're kind of in this situation?
Yeah, everyone's been really understanding. They wouldn't want to come into the office right now anyway. So the fact that we have that option available to them has been a really great thing. The only thing that we've come in contact with that's been a problem is people not ever using Zoom before. So sometimes we've had to walk them through that, but really it's a pretty easy process that we can walk them through pretty easily and get that done.
And if anyone out there does want some extra advice or instruction on how to use Zoom, you can always give us a call too. Our number is 1-800-928-4001, and any one of our staff could help you get logged on or kind of explain what to do, maybe send you a link of instruction.
We have a whole protocol that you need to know about. So every one of there's 29 of us on the financial planning team. There's essentially 6 of us that are deemed planners, if you will. And so we're all responsible for, about 100 families a year that we have to do or get to do. It's an honor, honestly, the family updates for. And getting those in on the Zoom. And I will tell you, just to go along with what Jamie said, the first couple weeks they were resistant. And now they're almost, I don't want to say demanding, but nobody wants to leave the home. I talked to my mom on the way here today to do the radio, and she's 73. My stepfather is almost 80, and they've not left the house in over a month and a half in Florida. We send them ship every week, so it's a huge challenge. And Jamie, I appreciate you sharing your personal stuff with us, because the real challenge for the people listening is understanding what's coming next. Mm-hmm. And that's what we're doing with the Market Carver. That's what we're doing with the Thirdly meeting we're having for our families, is trying to explain to people what's going to happen economically, what's going to happen in the market, and you telling people what happens next. So I'm going to ask you that question before Angie gets to ask her question. What comes next?
I guess that we are waiting to see how this all unfolds, but what we've seen from this is that people working from home, they're seeing, I'm not spending so many hours a day in the car. I'm not spending money on gas. I'm more productive during the day. I can get more things done. So people are finding a lot of efficiencies in this work from home. So we might not know exactly what it's going to look like, but it's definitely going to be different than what we started out with before this quarantine. That there's some, like the Zoom coming out, they come up with so many more updates to make it more efficient, more secure, and easier to use. So that might be a new normal once we come out of this quarantine. Maybe not working from home every day, but working home 1 or 2 days a week instead of driving to the office every day. That could be a new normal. So still waiting to see how that's all going to unfold and how it's going to work in everyone's different responsibilities and jobs. But it's definitely going to look different than what it did before.
Amen. All right, Angie, go ahead.
Well, I just pulled up an article myself to kind of see what some of the pros and cons were of this. And I just wanted to mention a couple of them to you so you could comment, because it did mention technology allowing us to stay connected. But this one I thought was interesting. It can lessen some of the guilt for working outside of the home. And I thought, okay, you're the perfect person to ask with having a new little one at home. I mean, do you sometimes feel that when you're leaving home to go work outside?
Yeah, and I think too, it's not just work, it's with everything. It's the whole life balance. So you're supposed to work out. Well, if you want to work out in the morning before work, then you have to really leave the house by 5:30 so you can go get a workout in and get ready for work and get to work on time. Well, then you don't see the kids in the morning. So not just with work, but with every part of life, there's a struggle, and there's trying to determine what's the best to do and what makes sense for your life and not missing out on the kids all the way. So this work-life balance is definitely different with the quarantine. I'm with my girls when they wake up in the morning and can put them down for nap times and get them fed and still be doing work. So
absolutely. And Jamie, hey, we're going to run out of time, but I certainly appreciate you being with us on the show.
No problem. I'm happy to be here.
Take care. Bye-bye.
You too. Bye.
Hi, Joni Michaels here. Joe's been hosting financial radio programs for over 20 years, and during his 7 years at Purdue, Joe developed the 5 critical elements. You see, there are 5 areas we all go through that can impact and even derail our retirement plans. YourLifeAfterWork.com has been focused on you on your retirement for over 20 years. You may have had a 401k as well as IRAs. Those are all defined contribution plans. Consider this program is about your defined contribution plans becoming defined distributions. You see, we all exit. You'll either take money out of those retirement plans when you decide or when the IRS decides, or your heirs will have to deal with the situation, but we all exit. I encourage you to call 800-928-4001 to meet with one of the talented talented financial advisors at the Financial Enhancement Group. I've listened to this show for years, and what Joe says just makes sense. Don't you think it's time for you to call 800-928-4001, yourlifeafterwork.com. Now let's get back to the show.
Hey, we just had Jamie Burton on the show this last segment, this last conversation. I can't imagine being a single parent, and she's not anymore, but she feels like it because she has a husband who is a deemed essential. I can't imagine being a parent of a young kid and a newborn and trying to navigate this world. So if you missed that, don't forget you can always go back to our podcast, consider this program. You can pick up that segment. Jamie gave some good advice, and we're just very empathetic. Both of my kids are out of the house, and I'm not seeing it. But I will tell you, the first time I left the house in this COVID virus for 2 hours to come do the radio show, socially distancing with Angie, my dog freaked out. His name's Othello, and he was not happy when I got back. He was doing spins. I cannot imagine the amount of separation anxiety that's going to exist with a young parent and a young child in this world. So we have huge, huge challenges. You're listening to Consider This Program. I am your host, Joe Clark.
And I'm Angie Kinzer.
And Angie didn't even bother to tell me what the topic of this next one was.
I think talking with Jamie, it might kind of just flow into talking about what's going to change with our budgets now that we're in this.
I always look for words called upgrade.
Okay.
Right? And Barb teases me every now and then because I use upgrade a lot. And no, I'm not trying to upgrade a spouse. I've been married for 31 years. Don't intend to change that. There are things you can upgrade. There's things that you can't. You can upgrade a car as you get older. You can upgrade your house as you make more money and get more secure. You can upgrade your job as you get more experience, more education. There's a lot of things you can upgrade. So my two biggest upgrades that I help people with as a financial planner are upgrading their portfolio, which I think we've talked about, and the second one then is upgrading their budget.
Okay.
Right. So, Angie, you know, I mean, this is you don't know what you don't know, but you've been on the show now for a few years, and you've learned more than you think you do. So it's funny when I talk to Angie, she goes, "Well, you're the financial planner." No, Angie, you know more than the average person, I would bet, who's working in our industry, quite frankly. But that's beside the point. So here's the deal: when you go to retire, and when we say retire, we call it your life after work, because we don't watch most people stop and grow grass. Right? It's the common comment that I get from more than 1,000 families that we've helped to leave the workforce. The common comment is, "I don't know how I got it all done when I was still working." That's the most common, right? Whether it's volunteering at the hospital, working in a woodworking shop, working at Lowe's because you always want to be around tools. We don't have a Home Depot in Anderson, so it seems to be Lowe's is the common one. But pick your favorite hardware store there.
Just a career more enjoyable.
Yeah, something not for money, for pleasure.
Yes.
Right? It's something that's there. But the bottom line is, when you leave the workforce, what we're taught in our industry, and it's really, really bad math. It goes right along with the virus and everything else we're seeing today and the challenges that are out there. I have a book in my office. It's called Lies, Damned Lies, and Statistics. And you can take math to make it say anything you darn well want. And when you've got a bias, which we all do, I don't care what you think, you've got a bias. I started off every class that I taught at Purdue for 7 years, 14 semesters. I said, listen, you're not allowed to talk about money, religion, and politics in Indiana. And so just so you know, I'm a Christian conservative that manages money. And, I'd have students with their mouths gape open going, "What? You professor, you can't say that." And I go, I have to say that because I have a bias. I look at the lens through those three things. I look at the lens through a married father. I look at the lens through somebody who's born and raised in Indiana, never left. I look at the lens through, somebody who has been raised in, a moral environment that's we've not had divorces. There's challenges that exist out there that we're used to helping people with, but you have to know the lens with which you look through life so that you can figure out what it is you're missing. So Jeff Henderson, one of the pastors at North Point in Atlanta, from Gwinnett Church, taught me to be ruthlessly curious about my emotions. And so when I have an opinion on anything, I try to run it through, why do I believe that to be true? And every now and then, Angie, I talk myself out of a point, right? I know you'd find that shocking, but I do, right? But it's important that we're alert, that we're aware, of our biases in terms of where we are and what we believe to be true and where it is that we're headed in this crazy period of time. So what I was taught as a CFP, and what I was taught as an academic, is that you need about 70% of your income to retire. And what I have found is the majority of families that we take care of are anything but normal. They're anything but average. And if you're listening to the show, especially at 6 a.m. on WIBC on Saturday morning, you are not normal, right? Face it, you're on a unique journey. If you're listening to this on a podcast when you could be listening to anything else, you are not normal. You are unique. You are doing the heavy lifting. You're putting your time into this deal to try to have a better life on the other side. There's no way around it. The neighbor next door is probably listening to Barney Fife for the third time, right, on the Andy Griffith Show, which is the number one trending thing I noticed on Netflix yesterday.
Is it really?
Right? It's kind of, and I love Barney. The one bullet guy. It's a beautiful thing. He Aunt B. But here's the deal. What we know to be true is when you go to separate yourself from the workforce, you need 100% of your standard of living. So there's two ways to upgrade your budget. One is to begin to reduce things today. I tend to tell people that you can give up chocolate to lose 40 pounds. You cannot lose 40 pounds and then give up chocolate. That leads to anger management, right? And so people will have this notion that I can retire and then I'm not going to golf, or I'm not going to have good wine, or I'm not going to go to expensive restaurants, or I'm not going to join the club, or I'm not going to buy new cars, or all of these restrictions that they suddenly apply. So you hit the end zone, if you will, and now I'm not going to do this. Folks, that won't work. I'm telling you, I've seen that lead to divorce. I've seen it lead to early death. I've seen it lead to counseling. I mean, I can't tell you the number. It just doesn't work. Don't do it. Don't do it, right? What you need to know is what your budget is when you go to retire, and you can give away stuff today while you're still working to achieve a goal so that you can maintain it once you've reached that goal, right? That's one. Two, you can always make more money, as you're going along. Anytime you have an addition to your income, a bonus, a raise, anything else, make sure that you're increasing the percentage that you're saving as opposed to increasing the percentage of your budget. Third, one-offs are better than long-offs, right? So when you have cable, it may not sound like that much money. ESPN may not sound that expensive. It is when you're 96, right? Because you do not want to get rid of that. That's something that you're used to and attached to. Going to Italy, once we can get through this virus business, going to Italy, may cost 10 grand, but it's one and done, right? So any extra money that you get, make sure you're using to either decrease debt, increase savings, but the worst, absolute worst, is to add on to your monthly standard of living costs. That's how you upgrade a budget. Hey, you're listening to Consider This. I'm Joe Clark, along with Angie Kinzer. You got a question or comment, give Angie a call, 800-928-4001. Take a break and be right back.
Hi, Joni Michaels here. We know you care about your money, but are you tired of worrying about it? The Financial Enhancement Group takes care of people just like you who don't want to worry about their money. As fiduciaries, the team at the Financial Enhancement Group will care for your nest egg just like they would care for their own if they were in your situation. There are many decisions you'll need to make as you face retirement, and the team at the Financial Enhancement Group is here to help you. Call 800-928-4001 or go to yourlifeafterwork.com to set up a time to meet. The confusion and complexity of retirement is almost as daunting as is the excitement of retirement. Don't let your fear and frustration of taxes and investing derail your retirement. Call the Financial Enhancement Group at 800-928-4001. They'll give you a complimentary second opinion on your strategy for retirement. Begin your adventure in your life after work. Call 800-928-4001 or yourlifeafterwork.com. Now back to Consider This program with Joe Clark.
Volatility exists in a lot of places. It exists in relationships, how you feel about your spouse, how you feel about your work, how you feel about your God. Volatility exists in the market. Good Lord knows that. We are on the track right now, at the time of this airing of the show, for the 6th most volatile year in history of the markets. Big time volatility. You can have volatility at work, how you feel about your boss, how you feel about your coworkers, those kind of things. Volatility exists everywhere. But volatility also exists in your income tax return. I'm Joe Clark, host of Consider This program.
And I'm Angie Kinzer.
And Angie has tasked me with carrying this segment, meaning she doesn't have a lot of questions from you guys. And it's my job to give you a dissertation, which none of you want, over tax planning in volatile times.
Well, yeah, tax planning in uncertain times. We talk a lot.
This is Angie's fault. So when you call her to get set up for your next steps appointment, your meeting, and believe me, we are still doing these every week right now. People are calling in, and you're welcome to call in. Our next steps meeting is a very, very simple call to Angie at 800-928-4001. And we will walk out of a meeting, a 90-minute Zoom meeting. You get 3 things. The first one is we will tell you, based on your situation, things you should consider today. 2, things you're going to want to consider in the future. And 3, if we choose to partner together, we're going to tell you things that FEG will do for you to get that done. We're going to do it in 5 areas, what we call the 5 critical elements. So your life after work, the annual tax planning, the investment playbook, life happens, and the last and but not least, the legacy plan. We're going to cover each of those 5. Give you ideas, suggestions for today, tomorrow, and if we partner together, what it is we will do for you. Again, that's our promise. You can find that at findyournextsteps.com to get signed up for one of those meetings. And by the way, in a couple weeks, we're going to have a 6-day challenge where I will actually teach for a half an hour on each of those days. You complete the 6-day challenge. One, you've got a really good education relative to those that you're competing against or dealing with. Number 2, you get $49 that you can send to your favorite charity. So we've got a lot of charitable organizations that are supporting this endeavor that are going to help us get it out, but we would invite you to do that too. Go to Financial Enhancement Group on Facebook and sign up for the financial tidbits. That'll be an easy way to get it, or go to findyournextsteps.com. All right, Angie.
Well, this is pretty general, and that is, we know that the tax deadlines have been extended with the CARE Act, but what else will impact our taxes that we know about right now?
So a lot of people are going to have income variability. And that's so what happens if, and we've talked about this a lot, and I know there's places on our website you can go find it. You can always ask Angie, 800-928-4001. But I've done videos on how your tax return works. But the best way to think about it is a series of stair steps. And this is a big one that's going to get missed, Angie. And there are going to be people whose income is really, really, really down this year because of the coronavirus, right? So they may normally be in a 22% bracket or higher. And yet, in the past, they've saved money. They put it in a 401k. They put it in an IRA. We talked about part of the CARES Act allows you to take out up to $100,000, assuming you're vested in that, between IRAs and 401ks. You can take out that $100,000 and pull that money out and pay the taxes on it over 3 years, right? But you don't have to wait 3 years. You could do it this year. So let's say your income has gone from a reasonable sum to zero, right? And you fully expect next year you're going to be back to being at the 22 or 25%. Why not take that $100,000 out and pay the taxes at 12%, part of it at 10, part of it at 12, in a year where your income was down? That's that volatility in an income which dramatically impacts your tax return. So I think that's one of the things you have to look at. We always send out a tax planning package. Middle of October is when it's going to come out this year. And it's going to ask you 8 to 10 questions. We do this for the families we serve. We'd love to have you have the opportunity to be one of those people. Like I said, call Angie and get signed up for a Next Steps meeting, but we can sit down and we'll help you go through that. We don't charge extra for that. We get paid to manage money. We manage more than $400 million plus. We try not to throw out numbers because of the volatility. It's a lot more than that right now, for more than 1,000 families across the country. And we're happy to sit down and have that conversation with you. We work with people who don't want to worry about their money, and that lets us do the things that we do. But income variability and tax planning this year, this can change. What you do this year could change your quality of life for years to come. I will just tell you that.
Well, since we're talking about volatility, I mean, with the drop in the market, should we be paying attention to losses in a portfolio?
So one of the things that we do for the families we serve is what's called harvesting losses. And understand that that doesn't work in an IRA. It doesn't work in a 401k. Upgrading your investments in an IRA and a 401k definitely does. But harvesting losses don't help you. Losses inside of an IRA are no big deal, positively or negatively. It's just your balance, because it all comes out taxed at your marginal rate as ordinary income when you go to retire. There's an exception in a 401k, but very few people use it around here. Where losses do matter is inside of your retail account. So if you have an account just in your name, or you and your spouse, or in your trust name, going in and harvesting losses that are in there to be able to offset gains in other places matter a lot. If you've invested in energy or utilities, materials, airlines, GE, I mean, I hate to pick on a company, but there are some companies that have just been slaughtered, not just this year, but some were last year. But this year, there's companies that are down 70%. Goldman Sachs put out a release over the weekend that we're going to talk about in the Market Carver. And if you're not getting that and you like this show, you really ought to get signed up for the Market Carver. You can go to yourlifeafterwork.com, ask for that. We'll put you on a list. I send a long Market Carver every week to my families. It's a video that we do that we think are the most important things that happened in the market the week before. For this, we only do it, we do a shorter one, but it's free for the community, for friends of the Financial Enhancement Group, people who pay attention to the show and to our webpage and those kind of things. But Goldman Sachs put out a thing right now. As of the date of this recording, which is the 27th day of April of 2020, from the time of the market correction, the S&P 500 is down 11%. But the median stock is down 28%, meaning the majority of stocks are still getting crushed. It's the large market cap stocks, and it's one of the reasons we don't invest in an index as in the S&P 500. We think that is a mistake that people make. You saw that happen in September to December of 18. We think if you have a retest, you're going to see it again. So it's very, very interesting times.
What should we be focusing on with our contributions to our qualified plans then?
So if you have the ability to still put them in. I think you're probably buying low. That doesn't mean it can't go lower from here. But I still think that if you're able to pick the companies that you're in, you're doing okay. I would always prefer you be in exchange-traded funds and individual stocks as opposed to being in mutual funds and a 401k. If you're over 59 and a half, you ought to call Angie at 800-928-4001. Find out about in-service non-hardship distributions. I have never seen a time more important right now than, one, to maintain investment discipline, but number two, to make sure you're following the fiduciary focus, where we're paying attention to the risk and volatility and the fees and expenses, the taxes today and tomorrow, and the real return. Give Angie a call, 800-928-4001. If you have a 401k, you're over 59 and a half, you owe it to yourself to find out more about the in-service non-hardship distribution. We'll take a break and be right back.
Hi, Joni Michaels here. Joe's been hosting financial radio programs for over 20 years, and during his 7 years at Purdue, Joe developed the 5 critical elements. You see, there are 5 areas we all go through that can impact and even derail our retirement plans. YourLifeAfterWork.com has been focused on you on your retirement for over 20 years. You may have had a 401k as well as IRAs. Those are all defined contribution plans. Consider this program is about your defined contribution plans becoming defined distributions. You see, we all exit. You'll either take money out of those retirement plans when you decide or when the IRS decides, or your heirs will have to deal with the situation, but we all exit. I encourage you to call 800-928-4001 to meet with one of the talented financial advisors at the Financial Enhancement Group. I've listened to this show for years, and what Joe says just makes sense. Don't you think it's time for you to call 800-928-4001, YourLifeAfterWork.com. Now let's get back to the show.
78 days. That is the difference between creating the Secure Act that stretched out RMDs to age 72, eliminated the stretch IRA, created all sorts of different plans and things for retirement programs, and the coronavirus and the resulting CARES Act that came out to play. It is confusing, folks, and we have had very, very influential people and firms in the state of Indiana put on very, very large meetings and get this wrong. It's confusing. It's moving at the speed of sound. So we're going to break down a little bit of that for you today, but more importantly, we're going to focus right on estate planning and the things that you need to think about inside of your plan. I am your host of Consider This program, Joe Clark.
I'm Angie Kinzer.
She's kind of my co-host, so I shouldn't probably just say that I'm the host. I've been doing it for 20 years. Angie's not even 20. No, yes, you are, but you have.
I'm not even 20 years old.
You're a chickadee. All right, go ahead and ask your question.
Okay, well, I know that there was a couple of different ways we could go on this as far as the estate plan, and I know that there are probably certain kinds of documents that might be more important to keep updated now in the situation we're in. But also a question that I've gotten that ties into it is it a favorable time right now for gifting assets?
It depends on what you are trying to accomplish, right? That's
with
a
depreciated values, I guess, is what I'm thinking of the gift, knowing that it's probably going to go up, up.
No. We don't know anything.
Well,
we hope, right? We hope. This is not a promissory show. We cannot guarantee future results. Blah, 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 blah. No, but I'm serious. I mean, we don't know, right? I mean, nobody would have believed some of the company's stock prices are where they are today, from some of the Dow stocks and from the big stocks. The only stock that has been in the Dow Jones Industrial Average since it was started is General Electric, and it has been massacred long before we ever got to the coronavirus, right? Boeing, is another one. So we live in very, very interesting times. So I don't ever want to hear you use the word no again. But if I had, and in fact, I'm doing this with a few firms, right? So if I thought the value of my business was worth $100,000, and today I thought it was worth $80,000 because of uncertainty and everything else, and I was going to make a gift to my kids, Kaylee and Kendra, and I expected them to keep the stock in the company, it is an ideal time. Is it an ideal time for me to give stock to my kids that I expect them to sell? Now, here's where life gets to be really, really interesting. And this is something that you're not going to hear on a lot of radio shows. So I got to walk you through this. And we're going to pretend like Angie's my daughter, which she's not, but you don't know Kaylee and Kendra, and you do know Angie. So let's say I give Angie my green Masters Cup from 2018 that my friend Randy Hyder let me go to. I give Angie this cup, and I paid $100 for this cup. So that's what's known as my basis. Now remember, we're not talking about IRAs. We're not talking about 401ks. So I paid $100 for this cup. And today, because there's no Masters until November, people are willing to pay me $1,000 for that cup, right? So if I sold that cup, Angie, I have a $900 capital gain, long-term capital gain. I've owned it for more than a year. That was 2018. We're now in 2020, right? So I've got a $900 long-term capital gain. At my tax rate, that's 20% tax. Now, you may say, Joe, that 20% is not a very high bracket. No, it's the highest you get in long-term capital gains. It's considered, long-term capital gains are considered a preferential item, which is important to understand for this conversation, right? So if I die and I leave Angie this cup, Angie could sell the cup for $1,000, and how much taxes would you pay, Angie?
Well, at my basis.
No. I die and you inherit this. You get what? You get a step up in basis.
Yeah, so
a step up in basis means you pay no taxes at all, right? So should I give you this cup today, right? If I know you're going to get a step up in basis at death. Why? If I give it to you today, your basis is my basis. Meaning your basis is the $100.
Right, so I should just wait.
So now you've got the darn cup, right? And you're not going to sell it.
No.
Right? So now this becomes very, very interesting, and this is something people miss all the time. If you are in the 12% tax bracket or below, there is no such thing as a long-term capital gain, right? So let's say that cup was worth $1,000. And people are very, very remiss to sell when things are down, right? The people who have assets, it's kind of like, I heard this all the time when General Motors hit $100 and then it hit 70 and then it hit 50. People would tell me when it got back to 100, I'm so far out, it isn't even funny, but I'm not selling it now. My ego, they didn't say ego, but my ego couldn't take a hit, right? And we all know they wish they would have taken the hit, right? You'd have been better to pay the taxes. So now this cup's down to $500. I still have a $100 basis. So if I sell it, Angie, I still have $400 of long-term capital gain, right? Or $80 worth of federal taxes that are due on top of that. But you're struggling. Now, she's really not. We've had 0 people of 29 that have been laid off. So I don't want you to think ill of that. But let's say Angie's struggling, and let's pretend that she's in the 12% tax bracket, and she needs money, right? And I think this cup could go down further, quite frankly, because the Masters did get rescheduled to November. Once we get there and they make another 1 million of these cups to be able to hand out this year, it's probably not going to be worth $500, right? It was worth $500 when they canceled the Masters, right? It dropped from 1,000 to 500. I think it's going lower. Personal opinion. Right? So I give Angie the cup. Angie's basis is now $100 because I gave it to her during life. She sells it, but because including the amount of money that she got from it, she's in the 12% tax bracket, she pays 0 in capital gains as opposed to me paying $80 in capital gains, right? So from a family dynamic, which is better, Angie at 0 or me at 80? Because we're talking about outflow, not inflow, right? We're not talking about income here, right? So when you talk about this from a legacy standpoint, if it's about gifting assets that you believe need to go down, this is or could further go down, or you need to give income to people, or anything like that, this is an ideal time to give. I did a video on our Facebook Tidbits page. So you can go to the Financial Enhancement Group on Facebook. Go to the Tidbits page, get signed up. The Tidbits group, just put in there that you're a radio listener, and I'll happily put you in. It'll let you get easier access to our challenges that we do, by the way, with some great prizes, including giving money to your charity. You just go to the Financial Enhancement Group, Financial Tidbits page, get signed up for that. The challenge is coming here in a couple weeks that you'll be able to know more about. But the reality is that gifting to charity of assets that are appreciated, even if they've gone down from where they were, is still a really, really good idea. We've talked about upgrades today so many times. Upgrading your budget, upgrading your life as you come out of the coronavirus, and now upgrading your legacy plan. I could spend a whole segment on our whole radio show on those. Give Angie a call, though, 800-928-4001. Get signed up for your Next Steps program. 800-928-4001. We'll take a break and be right back.
Hi, Joni Michaels here. We know you care about your money, but are you tired of worrying about it? The Financial Enhancement Group takes care of people just like you who don't want to worry about their money. As fiduciaries, the team at the Financial Enhancement Group will care for your nest egg just like they would care for their own if they were in your situation. There are many decisions you'll need to make as you face retirement, and the team at the Financial Enhancement Group is here to help you. Call 800-928-4001 or go to yourlifeafterwork.com to set up a time to meet. The confusion and complexity of retirement is almost as daunting as is the excitement of retirement. Don't let your fear and frustration of taxes and investing derail your retirement. Call the Financial Enhancement Group at 800-928-4001. They'll give you a complimentary second opinion on your strategy for retirement. Begin your adventure in your life after work. Call 800-928-4001 or yourlifeafterwork.com. Now back to Consider This program with Joe Clark.
Well, good morning and welcome back to Consider This program. If you don't know, my name is Joe Clark. I am the managing partner of the Financial Enhancement Group, a registered investment advisory firm with the SEC, located in central Indiana. We are in the business of helping people do financial planning and managing their assets. We do that for more than 1,000 families across 29 states, across 30 states, actually. I don't know where 29 came from. More than $400 million that we manage with internal money management. I'm a tax junkie, and that's what this show is really about. Those of you that are listening on some stations didn't get to hear all 5 segments. I will tell you, if you go to our podcast, Consider This program, anywhere you listen, iTunes, Spotify, whatever it is, you can download this show at your time and be able to get all 5 of the segments of the show we talk about. Angie, you said we missed some stuff.
Well, I mean, our segments go so quickly that sometimes
Fastest hour in radio.
Yes, it is the fastest hour in radio. So just this last segment, we talked about estate planning and how to upgrade. But one of the things that people have been asking, since we are in kind of different times or the new normal, are there certain documents that should be updated? Because, we always talk about beneficiary designations and the normal things that you want to update every, I don't know, what do we recommend every...
Well, we look at them every year when we do the family update, but it's usually every 3 to 5 years. The documents truly do need to be updated because of a tax code change, an IRS ruling, a state change, depending on the state that you're in.
Well, being in, during a crisis, if the potential of health is an issue, then there's other kinds of like health directives, such as powers of attorney, HIPAA release, things like that. In a situation like this, should we kind of check into those kind of things?
I think that should be, I think you should very much make sure you have those documents in a period of time like this. Here's the one that concerns me, and it came out of the Secure Act, which was passed December 20th. It's one I'm going to spend a big part of my week on this year, or for right now. In Middle America, we tend to want to make our kids to make it on their own. I mean, let's just face it. If you're a baby boom age person, and I'm technically not, I'm 53. The baby boom was technically 44 to 64, and I was born in 66. So technically I'm not, but I clearly identify as a baby boomer. And the key thing about us is we want our kids to grow up doing better, but we want them to do it on their own. We want them to be able to prove their individuality. We want them to be able to prove that they were successful. Right, so a lot of us don't talk about money, and yet most of us, at least those of you listening to the show, are pretty good savers, right? So me having a $2 million 401k, I don't, by the way, having a $2 million 401k or IRA, being 62 or 63 years old, I probably have 50 to 75 of those people, right? And they've got kids, and the kids, just like us, when we were younger, are trying to stay alive, right? They're trying to figure out how to pay house payments and car payments and manage kids. And what do you do when you're a single mom or dad, right? And a lot of us have not addressed the fact that we are not going to spend that $2 million in our IRA or 401k. You may think you are. I'm just telling you, as somebody who's done this for 32 years for a lot more than 1,000 families, you won't, because you never know when the last day is. You may say, I have every intentions of leaving it all to charity. God bless. I'm just telling you, it usually doesn't work out. A lot of you leave money to charity, but not all of it, right? So suddenly I've got something happens to one of you, whether it be from the virus, a car wreck, a heart attack, a rare accident of some other nature, or just old age. And all of a sudden, your 30-something-year-old kids who are trying to figure out how to manage their $75,000 401k and get $1 million sent to them all at one time. And we used to help people to create a trust that would make sure that they didn't have to deal with that stress and pressure and decision-making of being able to pull it all out at one time. We used to be able to help people do that. The Secure Act changed the rule so that now when they pull the money out, they don't have to take any money out in a year, but they have to take all of the money out by the end of year 10. That is a huge, huge problem. If you die on time, as they say, right? So my life expectancy is 84 and a half, right? So I've got another 31 and a half years according to the averages, right? If I die on time, then all of a sudden Kaylee and Kendra are at their highest income earning years. And I just threw whatever it is I've saved and accumulated in an IRA on them, right? They don't need the money then, right? And they've got to take all of the money out over a 10-year period of time. So yes, there is huge estate planning stuff. I'm going to spend literally 2 days of my life on this. I've had talks with multiple attorneys, CPAs across the country on the strategies that we're dealing with this. I've got a trust right now that has a hole in it because the IRS changed the rule December 20th. It went effective January 1st. And 6 weeks later, I was in the middle of a virus, right? So if I died today, my state has a problem that I haven't been able to fix. And that's what this whole week has really been dedicated to, is to, all right, what's our solution now?
As I was reading through all this, I did keep seeing a certain word, and I was going to ask you about that to kind of verify with that. It says selling assets to a grantor trust.
You want me to lie and tell you I don't know what that means?
Yes.
Okay.
No.
So a grantor trust is the same thing as a living trust. People who are trying to impress you as opposed to teach you would use the word inter vivos.
Yes.
Right? That means living, right, in Latin. Grantor,
like a song.
Grantor trust, you're the grantor. You're the one giving, right? So you're the one funding the trust. So I have a grantor trust. I took assets. I took the things that I own, other than my 401k and my Roth IRAs. I took them and put them inside of my grantor trust. Right? The grantor trust the IRAs and the 401ks currently go to another trust that got essentially decimated, December 20th. So we've got to change those when people can come back to real life and work in legal offices. They weren't deemed essential. Interestingly enough, CPAs were deemed essential. I found that entertaining.
The other thing I saw in there is grantor retained annuity trust.
Yeah, a GRAT.
Yes.
You've got to use the axioms if you're going to do this. The acronyms. Yeah. So a grantor retained annuity trust. There's a couple different ways to do an annuity trust. You can have a lead trust where you're essentially giving away all of the income, but the asset goes back into your estate. You can have a grantor retained annuity trust where you have income coming in now. The charitable remainder trust where it's going to a charity at the end. There's all sorts of different things you can give. But all of those are trying to use the valuation that you talked about earlier, where things are down in value today. And I'm trying to get that out of my estate, yet still get my income, right? A GRAT is a good way of saying I'm getting my cake and eating it too. It doesn't always work, but it is one of those things people try. Hey, you're listening to Consider This Program. I'm Joe Clark along with Angie Kinzer. Call her. Get signed up for a Next Steps meeting. Go to findyournextsteps.com. But in 90 minutes, we will tell you things you need to consider today, things you want to consider tomorrow, and if we choose to partner together, what FEG will do for you. 800-928-4001. We'll take a break and be right back.
Hi, Joni Michaels here. Joe's been hosting financial radio programs for over 20 years, and during his 7 years at Purdue, Joe developed the 5 critical elements. You see, there are 5 areas we all go through that can impact and even derail our retirement plans. YourLifeAfterWork.com has been focused on you on your retirement for over 20 years. You may have had a 401k as well as IRAs. Those are all defined contribution plans. Consider This program is about your defined contribution plans becoming defined distributions. You see, we all exit. You'll either take money out of those retirement plans when you decide or when the IRS decides, or your heirs will have to deal with the situation, but we all exit. I encourage you to call 800-928-4001 to meet with one of the talented financial advisors at the Financial Enhancement Group. I've listened to this show for years, and what Joe says just makes sense. Don't you think it's time for you to call 800-928-4001, yourlifeafterwork.com. Now let's get back to the show.
Welcome back to Consider This Program. I am your host, Joe Clark.
And I'm Angie Kinzer.
Angie?
Yes. Well, I found some real interesting. It was actually in money.com, and it had an article about 5 places where buying a home is actually cheaper than renting. And I know that with the interest rates as low as they are right now,
How low can you go?
How low can you go? But it's also a seller's market, so the prices of homes are up. So they did a little analysis on 5 different counties and where it's actually cheaper to buy your home than it would be to rent a home.
Now, is this Indiana or is this America?
No, this is America. This is
Indiana. Actually, the Indianapolis MSA made the top 15. That was in another report. That's nationwide. That includes Anderson and down to Indianapolis.
Well, what this did is this took, like for instance, number 1, they're talking about Miami-Dade County in Florida. Mm-hmm. The average cost of a 3-bedroom rental there is $2,327 a month. That's the average. So it takes about 51.5% of your average wages to rent. So with the interest rates what they are today, and Freddie Mac at the end of March was saying the average 30-year fixed was 3.05%. It only took 49% of your wages to take a 30-year mortgage and purchase, because their average home sale there is $349,000.
Uh-huh.
For this.
See, okay. So lies, damned lies, and statistics, the book I mentioned earlier, right? Yes, it's cheaper to buy in Miami County right now than it is to rent. For 2%, sign me up for the rental. But more importantly, I'm not living in Miami.
Well, listen to this. Are you going to live in Wayne County, Michigan? Because the average cost of a rental there is $1,361, which is only takes about 27% of your wages.
That's more in my price range.
But the average home price there is $110,000. So it only takes, with 30-year fixed right now, it only takes 16% of your income.
Definitely
buy a
buy.
house.
Definitely
Yes.
buy. And I'm having this challenge right now, Angie. You know, I've got 2 young daughters. I both want them to stay here. One's married, one's not. You know, I both want them to stay here, and it's kind of like you can. It was definitely a seller's market in January. It was a seller's market in February. I am not telling you in April that it is a seller's market anymore. JP Morgan has already gone to a 20% requirement for down payment, right? A lot of people can't do it. There's a lot of houses that are entering the market. I don't know about the seller's market anymore.
Well,
but
yeah.
I'm with you, and those are really great things to consider and contrast. And you may want to go to our website, yourlifeafterwork.com. I wrote an article a few weeks ago for the Anderson Herald Bulletin on intrafamily loans, discussing this very point of helping people do the down payment. It could be an interesting time. Folks, our prayers continue to go out to those that are separated from their loved ones, from their families. You know, we've got to continue to self-quarantine as long as they tell us to. Otherwise, it doesn't do any good for anybody that's doing it. But it is no fun. I am ready to get back to real hugs, not virtual hugs. Here's my virtual hug for you. Have a great weekend, my friends. I hope you enjoyed the show. 800-928-4001. Be safe. Stay well.
You've been listening to Consider This Program with Joe Clark. As a certified financial planner, former professor at Purdue University, and with 31 years of experience helping families just like you eliminate the fear and confusion of retirement, Joe's team has the answers to your questions. Go to yourlifeafterwork.com or call 800-928-4001 and find a time to meet with the Financial Enhancement Group. There's nothing that will separate you from your retirement as fast as the IRS. There are many questions that can be answered at the Financial Enhancement Group. Questions questions like when to take Social Security, how will my 401k be taxed? These questions are just the tip of the iceberg, and you need to be asking these questions now before it's too late. The Financial Enhancement Group has offices in Anderson, Fishers, and Lafayette, Indiana, but they also take care of families in 30 other states. You care about your retirement, you don't want to worry about your money? Then the Financial Enhancement Group is right for you. As fiduciaries, they are required by law to treat your money as if it were their own and they were in the same situation. Call 800